News of stimulus being passed and, well, potential for more to come. I'm wondering if this has gold at least somewhat supported, but I'm surprised amidst the coronavirus uncertainties related to the UK that we're not seeing gold in positive territory here today.
Yeah, the big argument is going to be now that the stimulus is not enough, especially if this new strand comes into the United States and really weighs in on the economy, which, I mean, the way they were canceling flights from different countries and things like that and implementing new travel restrictions, you're probably going to see this thing come over. I think 6 flights are still coming in a day from Britain. There's a lot of concern about that. So, what's going to happen is people are going to pound the table that we need additional stimulus on top of this stimulus that just came out. The only problem is that it took so long to just get this round agreed on that, it could take months before another round occurs. So really, it's kind of a wait and see. I mean, we were lucky. We took a lot of positions off the table on Friday because of the fact that we came into that quadruple witching, and we thought that some of these markets were a little bit stretched to the upside. So we're lucky that we reduced much of the exposure, and it actually gives us great entry points on things.
All right, I like this because gold did seem to find a little bit of support amidst expectations that we were going to see some stimulus measures come through. We got the news, so maybe we're seeing some buy rumor, sell fact. The other thing that I'm hearing is that, well, maybe that fear factor component that we're so associated with seeing in gold isn't necessarily present there, but one could argue that partially comes from maybe the dollar getting a little bit of a lift and that fear factor coming into play there. I mean, these are definitely correlations that we look at. They sometimes get a little out of whack with all the different components, different fundamentals at play here, but certainly something to watch here. Again, you've got the dollar higher right now. You've got gold coming off a little bit. I just feel like it's lost that fear factor component, Phil.
The gold market has not been really responding all that well. I mean, we've finally kind of bounced off its lows, but the correlation of the dollar finally came back into what it traditionally is. It's about negative 0.88%. Okay. So it's got that negative correlation. The problem is that interest rates, now they got hit pretty hard today. If you look at yields, 10-year yield, that had backed off quite a bit here this morning from those highs that were banging out. So we're watching if the 10-year yield can punch through that 1%, that's probably going to take down gold again. So we haven't been as optimistic on gold. We've been playing more of the other metals, the markets like silver. I mean, look, silver's doing great today, despite all these lockdown restrictions. The platinum gave us a good opportunity to get back in last night in the 900s.
Let's take a look here at silver. I actually have gold and silver here side by side. Now, I'm glad you brought silver into the discussion here. I've got the 50-day moving average up. Gold's been kind of holding below it, just got recently above it. I could call it teetering above it. But, silver's been pretty strong recently, tied to some of the industrial aspects related to Phil and some of the optimism associated with some of the, again, getting back to stimulus. And one could argue strength we've seen in China, demand. I mean, really, it all is kind of intertwined, it seems like.
Yeah, if you look at silver, what the chart that really you want to queue up for traders would be the gold-silver ratio. Okay. Because it broke down another level lower. So we took out this, we fell 4 handles just the other day, and it's broken below 72, and it looks like silver's becoming more of a viable asset, and it's unhinging from gold. Silver's biggest weakness is its strong correlation to gold investors. So when gold gets hit, silver gets hit. But the reality is that silver mining production has been relatively flat for the last decade. The number of fundamental uses and the demand structure has been continuing to increase. So it's just a matter of time before silver completely breaks away. Silver's a commodity. It's not a currency. And that's the thing that people need to realize, is that silver has true demand structure, and I think that silver will start to identify with other assets like copper, platinum, palladium under real use metal, where gold is not really used at all.
Let's talk a little bit about copper, because it has been one of the leaders. It's certainly been one that's been attracting a lot of attention, and we're talking multi-year highs recently, back to levels I think it was we haven't seen since 2013. Phil, could some of the UK concerns that we're hearing about this new strain derail some of that momentum to the upside? I mean, I'd imagine it's closely tied to the indices and the bid we've been seeing there as well.
It will, but those corrections in copper have been so shallow. You almost have to just come in on any dip and try and get some exposure. And how you do it, you either use the futures or you use, some proxy like a Freeport-McMoran or something like that. But I think you definitely, when you get these pullbacks, you have to add some to your portfolio. 350 could be a really key level on copper. It dipped down like into the mid 350s here in the overnight session. The deal is that the demand has been off the hook. The production levels have been somewhat strained. People are starting to hoard copper for this infrastructure play. It goes in line with the same thesis as like a lumber. Lumber has just been taken off. It's the same deal. It's been hampered by social distancing and sawmills, same as the production and mine production. And then the demand, people are stockpiling because you're seeing a lot of shifting of people going across. I flew down to Florida to look at houses. I would never think about doing that working at the Board of Trade. Now we see how we could set these things up to work remotely. Now it's possible to do that. So maybe I have a house built down there. That's new construction demand. That's new copper demand. That's new, wood demand, things like that. So I think that demand is being increased across the board as people realize that they can live outside of where they normally are.
Phil, I like that, and certainly we've been talking about some of those trends in the housing market and how they've influenced price activity. I wonder sometimes, though, if copper's gotten a little bit ahead of itself when you consider and sort of compare it to crude oil. I know we're here to talk metals, but crude's been a little bit reluctant to participate. I mean, copper, again, maybe more tied to demand out of China. Maybe we're just sort of, crude's been held back by some of the gasoline, lack thereof, demand for gasoline products. But, I mean, when you look at the copper chart versus crude, they oftentimes track each other very closely, and they've been somewhat divergent with, again, this recent run-up in copper.
Ben, I really love crude oil. I think crude oil and I believe silver are going to be the two best performing commodities. Now that, this news about this second strand or whatever is going to derail a bit of the momentum going upwards in crude oil. Crude oil is being completely managed higher. And what it is that prices are going up. OPEC's monitoring it. They are not going to shoot themselves in the foot by derailing this whole thing by pumping out a ton of crude oil. So they want to manage prices higher, and demand is slowly trickling in. Now, demand's going to get hit. Obviously, this is a step back for the airlines, for the cruise industry, for freight and everything else, which utilize, some of these energy products. But I really think crude oil, you can now look at, call spreads of the upside. We were, my partner Bill Baruch, we were talking about, hey, these 2021 crude oil is cheaper than the front months. Could there be something there? Maybe more supply comes on, but we're going to look to exploit maybe some of these irregularities in prices using call options this morning.
All right, I like that. Let's talk a little bit about what could potentially derail some of the momentum, some of the trends we've been seeing. I mean, ultimately, I guess this sort of brings us back to the big start of this discussion. Does a stronger dollar right now get in the way and provide a bit of a headwinds for some of the momentum to the upside in crude, whether you're talking copper? I mean, gold ultimately could be, silver as well gets thrown in that basket as far as products that ultimately, if the dollar starts to strengthen, would they lose some of that luster, so to say?
The dollar's strength is only going to be short-lived. So, I mean, you have to sell every rally in the dollar. We're going to look at this opportunity, like I said, to buy other commodities out there. The dollar index, I would definitely be, looking at the short side of it. I mean, we've been short for quite a long time. So it's natural that it's going to have some kind of snapback. But look at the Fed, they're going to come out, or the Treasury, they're going to have to print more dollars for this. You're probably seeing a little bit of, a big pullback in like the British pound and the euro currency because of the inverse correlation. They're probably thinking they're going to have to do the next round of stimulus. So it seems like it's been a trailing thing. Like we do something, then they do something. So, I really think dollar, I think you still got to play to the short side.